Hey everyone, welcome back. Ready to dive into today's EQAI Morning Briefing with me? There's a lot to unpack, and I can't wait to get into it.
Definitely. Lots of moving pieces in the markets today.
To say the least, I think the big one on everyone's mind, the one that everyone's nervously watching, has got to be this whole Fed rate cut situation.
Yeah, the uncertainty is definitely palpable.
It really is, and it's not just about the actual cut itself, right? It's how it could potentially impact everything, from bond markets to consumer spending. It's like a domino effect.
Right, exactly. It's the ripple effect.
Yeah.
And, historically, rate cuts have been used to try to stimulate economic growth, but the current environment, it's a bit more complicated than that.
It feels like everyone's holding their breath a little bit. I know the briefing mentioned that CNBC survey, the one that suggested a quarter-point cut was the most likely scenario. But even with that, I mean, does that really ease anyone's worries? I'm not so sure.
It's a wait-and-see situation, for sure, and I think that's what's creating so much anxiety in the markets. Remember, rate cuts, they impact borrowing costs for everyone. So imagine you're trying to get a mortgage or you're a small business owner looking for a loan. That uncertainty, it can really throw a wrench in your plans.
Absolutely, it makes total sense. So aside from the looming Fed decision, what else caught your eye in the briefing today?
Well, Intel's decision to spin off their foundry business is a pretty fascinating strategic move.
Yeah, that definitely caught my attention too, especially with the whole global chip shortage still being a thing.
Right, exactly. And this move, it allows them to address those concerns about chip design security, which is absolutely critical in today's world.
It's like we're living in a tech spy thriller or something. Everyone's vying for that technological edge.
In a way, it is. This move by Intel, it could have pretty significant implications for innovation, potentially even lead to lower prices for consumers down the line, which is always a good thing.
Well, let's hope so. And it's interesting because even with all the ups and downs in the tech sector lately, Intel's stock, it's been surprisingly resilient.
That's a great point. It seems like investors see this move as a pretty smart one, like they're betting on Intel for the long haul.
Speaking of big moves, we can't forget about Microsoft and their massive buyback program, right?
Now that's a decision that's open to interpretation. I mean, are they signaling extreme confidence in their future growth, or is it more a case of limited other investment opportunities?
It's like trying to read the tea leaves, isn't it?
Exactly. It's a question worth pondering for sure.
All right, well, while we try to decipher Microsoft's strategy, let's maybe shift gears a bit and talk about something that might hit a little closer to home. The world of retail and real estate. The briefing touched on some interesting developments there, like Zillow's stock performance, for example.
Right, yeah, Zillow's actually seeing a boost, at least in part, thanks to those falling mortgage rates we were talking about earlier.
Interesting. So does that mean it's a good time to buy a house? Lower rates, good time to buy, right?
Well, it's not quite as simple as that. There's this thing called the lock-in effect to consider.
Lock-in effect. Okay, now you've piqued my interest. Tell me more.
So imagine you're someone who managed to lock in a really good mortgage rate, say 3%, maybe last year when rates were lower. Now, even if rates drop a little bit more, like let's say to 2.75%, are you really going to go through the hassle of refinancing? Or even selling your house and buying a new one? Probably not, right? You've got a sweet deal. And that's the lock-in effect.
Uh-huh. I see. It's like being stuck, but in a good way, right? At least from the homeowner's perspective.
Exactly. But it can create this sort of standstill in the market where there's less buying and selling going on.
So it's not as simple as lower rates, more buying. There are other factors at play.
Precisely. And we can't forget about that broader economic uncertainty we talked about before. It's tough to make big financial decisions, like buying a house, when things like job security and inflation are still up in the air, right?
That makes a lot of sense. Okay, so while Zillow might be celebrating those lower rates, it sounds like others are proceeding with a bit more caution.
Absolutely. And that brings us to another interesting point from the briefing. Ferguson, the plumbing and building materials company, they're actually facing headwinds. And a lot of it has to do with that housing slowdown we're talking about.
It's fascinating how these things are all connected, right? One company's success can be tied to another's challenges.
Precisely.
Yeah.
Which is a good reminder, by the way, about the importance of diversification, both for businesses and for investors. Don't put all your eggs in one basket.
Words to live by. Okay, let's talk retail. This sector always feels like a mixed bag, and this briefing is no exception. On one hand, you've got Pret a Manger. They're absolutely crushing it with their U.S. expansion, aiming for $1.5 billion in sales.
It's pretty impressive. They seem to have really tapped into this demand for fresh, convenient food options.
And then, on the other hand, you have Target, a retail giant, taking a much more cautious approach, especially when it comes to their holiday hiring.
It's like two completely different strategies playing out. Target might be anticipating a more subdued holiday shopping season. Who knows?
Maybe. It's a good reminder that there's really no one-size-fits-all approach to success in business, is there?
Not at all. Every company, every industry has its own unique set of challenges and opportunities.
Very true. Now, before we move on, we have to address the elephant in the room, or maybe I should say the empty container on the shelf, Tupperware. The briefing mentioned they've filed for bankruptcy.
Yeah, the end of an era, for sure. It's sad, but I think it's a cautionary tale about the importance of adaptation.
It does make you wonder, how did such an iconic brand end up in this position?
Well, consumer habits are changing, right? Sustainability is a huge concern these days, and those plastic containers, they just don't hold the same appeal they used to.
I guess so. It's amazing how quickly consumer preferences can shift.
Absolutely. And if companies don't keep up, don't innovate, they risk being left behind.
It's a tough lesson, but an important one. All right, ready for a quick round of rapid-fire news? We've got a lot to get to.
Hit me with it.
Okay, well, there's buzz about a potential Disney/DirecTV deal in the works. Then we have, of course, Elon Musk deleting tweets again. Should we even be surprised at this point?
Right. It's practically a weekly occurrence now.
And finally, this one caught my eye. Apple is reportedly working on a new sleep apnea feature.
Interesting. They're really leaning into the whole health and wellness space.
They are. Out of all of those, that potential Disney/DirecTV deal, that's the one that really has me thinking that feels big.
I agree. If that goes through, it could really shake things up in the media landscape. We're talking a major power play.
For sure. So what do you think? What would a merger like that mean for the average consumer? Good thing, bad thing?
It's hard to say for certain at this point. It could go either way, really. I mean, on one hand, we could see greater consolidation in the streaming market, which could potentially lead to higher prices for consumers.
On the other hand, it could actually spark a wave of innovation and competition, right? Maybe we'll see more choices, better pricing. Who knows? We'll have to wait and see.
Exactly. It's definitely a situation worth monitoring.
For sure. Speaking of things worth monitoring, Elon Musk is at it again with the whole tweet and delete thing. Like, is anyone even surprised anymore?
Right. It's almost like clockwork. But it does make you wonder, doesn't it? Like, one little offhand comment from someone like Musk can send shockwaves through the market. It's kind of scary, actually.
Yeah, no kidding. It's a good reminder that social media, it's not a game, especially for these big players. Okay, let's switch gears again before we get too sidetracked. That survey about workplace rudeness, that one really resonated with me. I mean, it's sad to hear it's on the rise, but then again, are we really that surprised? Especially in this age of remote work and constant digital communication.
It's easy to forget sometimes that there's a real person on the other side of that screen.
Yeah.
It's like we lose those social cues, those little nuances of face-to-face interaction that help smooth things over.
It's true. Maybe we all need a crash course in digital etiquette or something.
Maybe so. A little empathy goes a long way, no matter how you're communicating.
Well said. Okay, on a slightly more optimistic note, let's end with that surprisingly positive outlook from Deutsche Bank. I mean, with all the uncertainty surrounding interest rates, the global economy, you'd think everyone would be bracing for the worst, but they're actually predicting a strong finish to the year.
I know, it's almost like a breath of fresh air, isn't it? It's good to be reminded that even amidst all the chaos, there's still room for optimism.
Exactly. A little bit of hope never hurts. Well, I think that about wraps things up for today's deep dive. We've covered a lot of ground.
We really have. From potential Fed rate cuts and chip industry shakeups to the ever-evolving world of retail and, of course, the importance of adapting to change.
Oh, and we can't forget Elon Musk's Twitter escapades, the rise of workplace rudeness, and a surprisingly optimistic outlook for the fourth quarter.
It's been quite a ride through the headlines.
It really has. So to everyone listening, we want to hear from you. What stood out to you in today's briefing? What's on your mind? Let us know. And hey, maybe your question will inspire our next deep dive. Until then, stay curious, my friends.